Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 13th of December. UK's Hammond offers the latest soft Brexit signal. The UK's Chancellor Hammond signaled yesterday that the Brexit process could take longer to finalize than the 2 years needed for the official Article 50 exit process to be completed. Hammond told lawmakers that a period of adjustment after the 2 years would help to maintain the UK's financial stability, as well as allow businesses to better prepare for their future relationship with the European Union. Coming on top of recent comments by Brexit Minister Davis that he has not ruled out the possibility of making payments to the European Union even post-Brexit in order to retain access to the single market, Hammond's remarks amplify the case that we may indeed be headed for a soft Brexit. The pound started moving higher during the European morning yesterday ahead of these statements, with cable breaking above the resistance now turned into support zone of 126.30 before finding resistance at the 127 hurdle. Given this optimistic sentiment regarding a smooth divorce with the European Union, we expect cable to continue trading higher for a while, at least ahead of the Bank of England policy meeting on Thursday. Thus, a decisive break above 127 could initially aim for the 127.60 territory. Dow Jones flirts with the psychological 20,000 area. The stock surge continues across the globe, although some indices finished the day in the red yesterday. In the US, we saw new all-time highs in both the Dow Jones Industrial Average and the S&P 500. Despite the fact that it closed the day in the red, the S&P 500 hit a new high of 2264 before retreating, while the Dow is flirting with the 20,000 psychological zone. Yesterday it touched a record high of 19,820 and closed the day positive. Following the US election outcome, the index emerged above the downside resistance line taken from the peak of the 15th of August, and since then the price structure on the 4-hour chart has been higher peaks and higher troughs. Therefore, we believe that the short-term outlook of the index remains positive, and we expect a decisive break above the 19,820 barrier to open the way for the psychological figure of 20k print. Overall, last month's rally in equity indices was probably the result of market participants speculating higher future inflation due to President-elect Donald Trump's promises of increased fiscal spending. We do expect this rally to continue heading into tomorrow's FOMC decision, as this may be the last chance for some investors to take advantage of the current borrowing cost levels. However, we remain skeptical with regards to the equity performance in the aftermath of the Fed decision. A hike, accompanied with a more hawkish future rate path, may force a lot of investors to jump off this bandwagon. As for today's highlights, during the European day, Germany's ZEW survey for December is expected to show a modest increase in both the expectations and the current conditions indices. This could be another confirmation that the Eurozone's growth engine continues to perform well and that the sentiment of German economists and analysts remains elevated as a result. In the UK, the CPI for November is coming out and the forecast is for an acceleration. This could diminish even further market expectations for any Bank of England action at future policy meetings, as fears of inflation overshooting the target have started to mount. Something like that could bring the pound under renewed buying interest. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.